Hello, everyone. Starting chapter 14, it's all about the cash flow statement. So the cash flow statement is basically one more important statement that normally accountants prepare at the end of each month for the users, besides the balance sheet and income statement and statement of retained earnings. And the reason why it's extremely important is it tells us everything about cash. Okay, so if a company goes up from, let's say, $10,000 beginning of the year to 15,000 at the end of the year, what does it mean when it goes up by 5,000? Does it mean that they made 5,000 profit? Or does it mean that they borrowed money? Or does it mean that they raised fund from adding more stockholders? So we don't know. So without looking at the cash flow statement, there's no way we know that is it profit or is it borrowing or what is it? So that's why we prepare the cash flow statement. It's basically, the statement is has three different activities. All right. The first one is the operating activities. The second one is investing, and the third one is financing activities. So let me show you very quick how I prepared the template for the cash flow statement. So the first part, it tells us about the operating activities. The second one is about investing and the financing. So basically, it shows you the cash in and the cash out within a specific period of time. And that period can be a 1 month or 1 year. For our video, for this video, we will do, we're gonna do one example that presents a 1 year of cash flow statement. So the main difference between all those three is the operating. It's all about the cash that comes from the revenues minus the expenses, but in cash basis. So when it comes to revenue and expenses, we can think income statement, right? But here's the thing. The income statement, it shows you revenues minus expenses on accrual basis, all right? So if you subtract expenses from revenue, it gives you the net income. The net income does not really mean net cash received, right? It's the net income regardless if we already received that cash or not yet. So what we're doing in the operating activities here inside the cash flow statement is to change the net income from net profit accrual basis to net cash received from operation. In other words, we're changing it from net income accrual basis to net income cash basis, all right? So let's say if I have a profit of $10,000, but I haven't received $10,000 in reality during that period, then my net cash from operation is not 10,000, okay? So that's what we're doing here in the operating activities. We are going to start with the net income. We take it from the income statement, and we are going to start adjusting that amount from net income accrual basis to net cash received from operation. The actual cash that received from all the hard work that we did at the company. So from selling, from providing services, right? The money that we received from our customers minus the money we paid for operating the business, salaries, rent, and all that stuff. So that's why it's called operation, because it's from running the business, the cash we make from running the business, from all the hard work, right? Versus the investing activities, this has nothing to do with operation. This is the money we pay or receive from buying or selling fixed assets or plant assets or the intangible assets like buildings, lands, furniture, cars, the intangible assets like softwares and franchises and all these things. So it's not really the money that we receive from selling our product, but it's from selling a building or a land, or so it has nothing to do with the operation. It's about investment. It's about when you buy a building and sell it, it's about investment. When you buy furniture, it's to use it for a long term, so that's investment. Okay, so you can tell that the net cash received or net cash paid from investing, it tells us a different story than the net cash received or paid from operating. All right, so those are the operating and investing, and then the third one is the financing activities. The word finance in accounting means raising fund. Okay, everything in the financing activities is about raising fund, either when we receive funds or when we pay back the funds. All right, so as an example, when we borrow money from a bank, when we raise fund from issuing stocks, this is financing. So it's cash that we received from borrowing or from just selling some of the stocks, right? It has nothing to do with profitability, right? Like the ones that shows in the operating activities, right? One more thing that goes to the financing activities is the dividends. Yeah, the dividends. When we pay dividends, this is also considered financing activity. All right. So those are the three different activities: operating activities, investing activities, and financing activities. All right. You can tell that there's a big difference between what each one of those sections is telling us about cash. All the hard work, all the cash that we receive from providing services and selling and all that. The main reason why we started that business is to operate, right? So this is the good cash. The good cash that the cash from all the hard work is coming from here. Investing, it's from selling any of the fixed assets. It doesn't really mean that we're doing well. It doesn't mean that there's any profits. So that's why it's nice to show the investing separately. The financing activities, that's it. When we have cash, when we have an increase in cash from financing, it doesn't mean anything about the profitability, right? It's about just borrowing money or bringing some partners. All right, so this was a quick introduction on the cash flow statement. What does it mean? Why is it important? And in the next videos, we're going to start an exercise from the book, and we're going to prepare the cash flow statement together from scratch. See you shortly.